today we are going to see one of the REITs, real estate investment trust companies listed in S&P 500 and Nasdaq in the US stock markets, uh, about the valuations and the current market prices, and are they fairly valued. The stock name is Cyrus One. The ticker code is CONE. So we're valuing at the date of 22nd July. So here we can see the quick run-up chart from the company. So uh, we got a 1 year data, 1 to 2 days data. So uh, in March 23, when you see here, this is the time when the S&P crash, when the S&P settled around 220 levels. Cone was around 40 odd levels, so $40 per shares. So it rebounds quickly in 8 to 9 session from 40 to almost 70, 66 to 70 zones very quickly. This is the points. Now it's almost 3 months or 4 months down the line. Now it is trading still around 78 levels at an all-time high. So let's see whether the company valuations justifies this price, and whether it is a good short-term opportunity to go short on this stock. I mean to say, to buy a put option or to take a short positions in the stock. Okay, so let's look at the financials. So if we see here, we got the financials data from 2015 to 2018. So coming to the revenues, the revenue growth in the last 5 years, if you see, is almost doubled. On a 1 year basis, they are going consistently at 19%, but the gross margin terms, not very significant number, not something which is very great. In terms of revenue, they are doing relatively well, but in terms of margin or the profit level, uh, these areas were really, they're not doing very great. Even if you see the pre-tax income, uh, they're making around 37 million, but the point is that these profits are not very consistent. These profits are very high volatile. You can see here, they lost 18 million and they gained 21, then they again lost $80 $80 million, which is more than 3 times of what they earned last year. So these profits are very volatile. Coming to the net income signifies the same, so it's not a very significant or a very good looking number. Still, it looks worse. So coming to the EPS, you can see their EPS is around 0.36 per share, that is 0.36 cents per share, uh, and they're paying a very good dividend of 1.92. So the dividend yield seems to be exceptionally well. So around 4% dividend yield. This is the area which they are doing really well, but the point is that when the company is not making very significant amount of profits, where these dividends are coming from? So that is one question. So now coming to the other areas. So uh, coming to the peer valuations, how they are doing when compared to the competitors or something. Coming to the real term valuations, uh, we can see here, the P ratios is somewhere around 220 to 137 levels, and the yields are significantly lower. And you can see here, when you do the peer term valuations, the company like medical properties, uh, which are going at a EPS growth rate of 200%, and they have a very healthy margin of 39%, and the EPS growth is almost 68%, is trading at a price of 18. It seems to be like a market leader. So when you take a Camden Property Trust, uh, they are trading at a 48 PE when the EPS growth is 36%, and those things. But if you look at Cyrus One, so it's not a very significant earnings number, because earnings is one thing which is troubling them for a long time. So whether this valuations of 78 is justifiable, it's really tough.